Today we will learn about how to prepare statement of profit and loss account for the company's final account. Here we can see that we have four columns. First of particulars, second for the note number, third for the amount, and fourth for the amount. The first particular we see here is revenue from operations, which is also known as net sales. Net sales is nothing else but the sales minus sales return. So the first particular in the statement of profit and loss account is revenue from operations, net sales. Second particular we can see here is other incomes. Other incomes is nothing else but we have seen in the final accounts of partnership firm that what comes on the credit side of profit and loss accounts, all the incomes that are on the credit side of profit and loss accounts comes under the heading of other incomes. So other incomes are dividend, interest, profit on sale of asset, etc. So these are other incomes which comes under the head of other incomes. And our third particulars in statement of profit and loss is total revenue, which is the sum of first particular and the second particular. So the fourth particular in our statement is expenses. Let us see which expenses are covered here in the heading of expenses. Here, the first thing that comes under the heading of expenses is purchase less return. Here, as we see in company's final account, we only prepare statement of profit and loss. So, the things that are covered in the trading account are also included in statement of profit and loss account. So, in the head of expenses, first thing that is shown is purchases less return. The next thing which we show under the head of expenses is change in stock. Change in stock means opening stock less closing stock. Here the difference of opening stock and closing stock is taken. After changes in stock comes direct expenses. Direct expenses means wages, freight, which are the expenses related productions are comes under the head of direct expenses. After direct expenses, we covered employee benefit expenses, salary, bonus, which are the benefit given to the employees are included under this heading, employee benefit expenses. After employee benefit expenses comes finance cost. Finance cost means when company took loan from the bank, when company issues debenture, the interest on these debentures, interest on loan, interest on bank overdraft, these are covered under the heading of finance cost. So these are finance cost. After finance cost, depreciation is covered under the heading of expenses, and after providing depreciation, other expenses like office and administrative expenses, which are postage expenses, electricity expenses, bad debts written off, are covered under the head of other expenses. After covering all the expenses, we should total the expenses. All the expenses are recorded as total expenses. Here, after finding out total expenses, we should make the new particulars, particular number 5, profit before tax. Profit before tax is nothing else but the difference between total revenue and total expenses. By taking the difference of total revenue and total expenses, we get profit before tax, which can clearly seen here that we see that particulars 3 and particulars 4. The difference of particular 3 and particular 4 is shown here, which is profit before tax. Commonly we know it by PBT. After finding profit before tax, we have to make provision for taxation, which is given into the question. So, profit before tax, the next particular number 6 is provision for tax. After finding the provision for tax, the last particulars, profit after tax, we will see here that profit after tax, which means we have to take the difference of profit before tax and provision for tax. We get the final answer of statement of profit and loss. The profit of profit and loss account.